get in a big voice, China jitters and the impact that it has on commodities and equities. Jim Rogers joins in right now. Jim, good morning. Thanks so much for joining in. This is Neeraj here. Afraid though, it is not a very good morning. The start to calendar year 16 has not been very great.
No, it looks like 2016 is going to be the year that we all have to pay a price for a lot of bad policy over the past 7 or 8 years. It doesn't look good.
What in particular doesn't look good, Jim? I mean, commodities have anyways had a washout year in 2015, but because of these Chinese jitters, do you think that poor performance is set to continue?
Yes, Neeraj. First of all, the American stock market has been worse than the Chinese stock market up until the last day or so. The Chinese stock market in 2015 was one of the best stock markets in the world. The American stock market was down last year, so all this started in America and Europe. China's catching up, and China's catching up in a big, big way. But my basic point is that we've had a lot of excesses for the last 7 years. We haven't had a major decline in stock markets in America, let's use America, for 7 years. We've had staggering amounts of money printing, staggering amounts of debt build up. We're going to pay the price. Don't blame it on China. If you're going to blame it on somebody, blame it on the American Federal Reserve. But it doesn't matter who you blame it on. The problems are now hitting us, and it's going to get worse.
Jim, one of your notes mentioned long China, short U.S. junk bonds. Is that the recommendation for investors right now?
Well, I am long China and short American junk bonds. I'm also short other American stocks. I'm short the technology stocks. You know, as you probably know, there's been 4 or 5 or 9 stocks in America that have never go down, that go up every day. I'm short those stocks. I'm short American junk bond stocks. I am long China.
What makes you so convinced about the China story? Because clearly, right now, it seems like there is a scramble from the government as well as the PBOC alike to sort of press all panic buttons and try and revive the economy, the currency market, as well as equities.
Is this Isha I'm speaking with?
Yes, that's me.
Oh, hello. Good morning. It's a delight to see you. Nothing convinced me. I mean, China is overdue for a serious correction in the markets. China has not had a recession for many years. That's very unusual. I'm not convinced that China will escape problems. America, as we grew to become the great country, had many problems. We had 15 depressions with a D. China's overdue, but I've got to own something. But I don't have to own anything. But in the meantime, I own China. I have shorted other things as hedges against it. And by the way, my shorts are bigger than my longs, so it's not as though it's a one-for-one kind of thing.
Jim, hi, this is Manisha as well joining in. How are you looking at the kind of sell-off that we have seen in commodities? I mean, the crude oil prices, I remember when we spoke last, you did say that we could see perhaps further declines coming in. What's your sense on where the support could be coming in there? And the kind of run-up that we have seen in gold prices, are you short crude, long gold? Is that the way to play it out?
Well, I doubt it. I doubt if gold has hit its bottom either. I own gold, as you know. But no, it looks to me like we're now in a period where everything is going to get smashed. You've been around long enough to know that periodically we have everything go down. It doesn't matter whether it's good or bad. It just everybody throws everything out the window because they're in a panic. It looks to me like we're in that kind of period again. And as you know, these periods are not fun. And a lot of people get hurt, including me, usually. But they come and go, and I'm afraid we're in one of those periods again. But again, I want to emphasize, you know, this all comes from the American Central Bank. There have been staggering amounts of money printed in the last 7 or 8 years. Interest rates have been zero for nearly 8 or 9 years. I mean, we've got gigantic debt. This is all a horrible, horrible economic mistake by central bankers. I wish your central bank were running my central bank, because your central banker is the least bad in the world. But unfortunately, we've got baboons running our central bank.
Jim, I want to ask you one more question on the crude oil prices. I mean, most of the OPEC countries produce crude between perhaps $2, $5, $10 on the higher side. And they have seen prices as high as 100 as well in the previous year and couple of years than that. With the kind of prices that we are trading right now, with the budgets getting squeezed, the spendings going down, job losses in many of these oil companies, what's your sense when it comes to the energy sector?
Well, as you know, normally when prices go up, they go up much too high. They turn into bubbles and hysteria. And when they go down, panic and fear sets in and markets overreact on the downside. It looks to me like we're going to have overreaction to many markets on the downside. How low can crude go? I don't know. I think I said 32 last time I spoke with you. But who knows? If the kind of panic that we see now sets in, you pick the bottom. I don't know. I'm not smart enough. I know I won't get it. It could go to, people talk about 20. Why not? In a serious panic. That's not my prediction, but that's what some people are saying. And in serious panics, everything overshoots on the downside.
We are in a period of unusual uncertainty, and the reason why I say unusual uncertainty, Jim, is because central bank action will be divided in 2016. Global growth outlook is divided, and frankly, I can pick spots of disorganized, growth.
Well, you asked, Anusha asked about China before. Some parts of the Chinese economy are going to do well no matter what happens to the world economy. If you're in pollution cleanup in China, you won't even know if America and Europe disappear. You're too busy cleaning up China. China is filthy right now. So some parts of the Chinese economy are going to do extremely well no matter what happens. And that's true of India. That's true of all of the world. And if you have to own something, those are the things to own, and you hedge yourself by shorting other things.
Jim, for the longest time I've tracked you, your basic approach is that you should always sell greed and buy fear. So to your mind, in which asset class right now, be it commodities, equities, bonds or junk bonds, where there is greed and where there is fear?
Well, the greed is in the American markets that I talked about before. Amazon, Netflix, those stocks never go down. Those stocks are selling at staggering highs. In fact, last year, nearly all stocks in America were down. The averages were only down 3 or 4%, and that's because these 5 or 6 very large companies never went down. So that is clearly greed. That is I'm short those stocks. It doesn't mean I'm going to be right, but I'm short those stocks. That's where I see the most greed in the world. I don't see, certainly biotechnology in America has been overdone. I don't see many bubbles, but I'm short junk bonds because the spreads between high yield bonds and quality government bonds are very low. That's where I see greed. Everybody scrabbling for yield in a zero interest rate environment, and those 9 stocks in the United States. That's where the greed is. Fear, look out the window. There's fear everywhere right now. It's going to get worse. Russia, I'm watching. Kazakhstan, I'm watching. Iran, I'm watching. Nigeria, I'm watching. But I'm not doing much of anything except watching at the moment.
Do you think there is fear in emerging market equities? Because 2015, frankly, was a poor year for emerging market equities in general. In fact, not 2015. Last 2 or 3 years have been particularly bad for emerging market equities.
Yes, but I don't see the panic yet. I have some shorts in emerging markets, but I don't see the absolute. Now, it may develop in China this month, this week, today. Absolute fear may emerge in some of the emerging markets. China may be one of the first. But you're right. What will probably happen is all of the emerging markets will panic and have crescendo. There'll be a panic bottom, I hope. I hope China lets the markets collapse. That would be good for them and good for the markets. But I don't see the absolute panic and the hysteria on the downside yet. It looks like it's coming.
Jim, what's the view on India then? Because the panic surely is setting in here as well. We've seen the equity markets get close to the yearly bottom.
Yes, your market is going down. I don't know if I wouldn't call that panic yet. How much is your market down from the high? It's down some percent, but it's not down 80% or something. Panic, Manusha, as you probably remember, panic is when markets are down 50, 60, 70%, and everybody just cannot bear the thought of stocks. We're not to that stage yet.
Jim, what is your view on the most crowded trade in the world, the long dollar index trade, the long dollar trade?
Well, I'm embarrassed to tell you that that's my largest long position. I am very long the U.S. dollar. The reason I'm embarrassed to say it is because many, many other people are too, and that's always bad. But my single largest currency position on the long side is the U.S. dollar. It has been for a couple of years, as I've discussed with E.T. before, and I am not selling yet. The reason I'm long, and I've explained this before, is that I expect a lot of turmoil in the financial markets, such as what's happening now. And in those times, people look for a safe haven. They think the U.S. dollar is a safe haven. It's not. It's not. But since everybody thinks it is, that's my longest position as we sit here today.
Jim, I'd like to...
By the way, as far as the dollar is concerned, what I expect to happen with the dollar, I expect it to get overpriced. It's already overpriced, but I expect it to go higher, get more overpriced, and it may turn into a bubble. Because if markets do go down 30, 40, 50, 60%, there's going to be a lot of panic in the world, and then the U.S. dollar will go much higher than it should. It will turn into a bubble. I hope if that happens that I'm smart enough to sell.
There goes your U.S. holiday. So he's long China, he's long U.S. dollar, and he's short U.S.
And he does not like India. Jim, is my assessment right that you still don't like India, even though on paper as an Indian I can prove that we have the best macros?
I love India. It's a wonderful place to visit. As I've said many times, I love Indians, but I don't own many stocks anywhere. I don't own Japan. I don't own Germany. There are a lot of countries I don't own that may have even better fundamentals. But in my view, this is a time to be watching rather than owning.
What did very well in 2015 was not a asset class. It was actually cash. Cash did better than S&P, cash did better than gold, cash did better than oil. So what's your view on holding on to cash for 2016?
Well, you're right, except you have to be in the right cash. If you own Japanese yen or Canadian dollars, you got wiped out in 2015. You have to own the right kind of cash. The U.S. dollar happens to be my largest position, so I did well. But no, you've got to be careful. A few years ago, a lot of people went into cash and owned Icelandic krona. You know the rest of that story. So you got to own the right cash if you're going to survive in times like this.
Jim, one final view. For the longest time that I've known you, you've bought into commodity stocks, agri-commodities at large. A lot of people are now saying that across the world, agri-commodity stocks are good to own. Are you buying them in the current weakness?
Well, I'm not buying stocks. I am looking at agricultural products, sugar. I have some orders in to buy sugar. Again, sugar has been bottoming here for 2 or 3 years. I suspect that sugar will be great in the next 2 or 3 years. I am looking at agricultural products, not agricultural stock. I mean, if I come across a good agricultural stock, of course I will buy it. But at the moment, I'm looking at the products themselves.
Yeah, sugar. Today it's having a down day, but yesterday it was holding up, and expect a cabinet decision aiding the Uttar Pradesh sugar mills as well. That is something we're going to keep a close eye on. But Jim, always a pleasure speaking with you. Thanks much for taking the time out and chatting in today.
My pleasure. It's always great fun to talk with you, and I sure love India a great deal, even if I'm not investing there.
Okay, thanks much.
So
okay.
Thank you.